Hey, good morning, everybody. How's everybody doing? Chris, how are you, man? Think we're having technical difficulties. Chris, can you hear me? Oh, your mic is off. There you go. Oh. Nope, you're on mute right now, brother.
Can everyone hear me now?
Yes.
Phenomenal. Yeah, man. Sorry about that.
We should use that edit right there as like an official intro for the Elephant Show.
Yeah, it's
Chris,
going
on
great,
you,
man. I can't complain. How's your day going, man?
Good, man. Good. Got up early. Started a new book by Grant Cardone. Got my gym time in and ready to bring in the new year, dude.
Amazing. Which one? Which book? If you mind me asking.
Something about staying motivated or something like that. I always read 2 books at a time. I've always got like maybe 3 or 4 books that I'm consistently reading, but I always make sure that I have at least 2 as a minimum. And one of them is kind of like a motivational thing, and then one of them is like a skill thing. So whether that's learning negotiating or learning how to tell stories or whatever that is, I've always got kind of 2 that I'm reading at the same time. So every time I finish a motivational book, I start a new motivational book. So this one I started this morning is by Grant Cardone, How to Get and Stay Motivated.
That's actually a very good book, especially if you're green into the real estate industry and you just don't know where to start. A lot of people become very inconsistent, especially going into different avenues, directions, and all that good stuff. And I think that'd be a good start for a lot of people to stay motivated.
I agree. I agree. Dude, it's got some great information for like just high level stuff, just building relationships, and it's phenomenal. It's got like 100 different. I think it says something along the lines of there's 100 different ways to stay motivated and things to think about. And just phenomenal book so far. So Nathan says
Absolutely.
10X, dude. I love that book. Amazing book. So we are New Year's Eve. Thank you everybody for being here. I want to hear, like, put in the comments, guys. What are some of your guys' New Year's resolutions? Chris, you got any New Year's resolutions? Like,
I guess I have a lot. I wouldn't say resolutions, right? I would say more so goals and objectives.
Okay.
Because initially, when people think of resolutions, the number one resolution I think in my eyes that everyone go to, I'm going to get in shape.
That's mine every year as well.
And a lot of people don't know what really goes behind that. It's more so like, if you want to get in shape, what does that really look like? What number do you want to be down to?
Right.
And exactly what are you going to go on a specific diet, or are you just going to state, I'm going to get in new shape? And a lot of people, and I think you stated a couple of weeks ago that a lot of people go into the gym, is so crowded the first week, and then literally a couple of weeks later, there's not a single soul. Everything just dies down.
I'm waiting for it, bro. But we know when you get up at 3 a.m. to go to the gym, there's also nobody there, no matter what time of the year you're going.
Yeah, absolutely. What about yourself? Any new resolutions or things that you got planned?
As a matter of fact, I'm going to share this with you guys. I have a New Year's resolution, and it's been the same New Year's resolution. I kid you not. I swear on my kid's life, it's been the same New Year's resolution, Chris, since I was in 2nd grade. Okay.
Oh,
so
I think I know what it is.
I'm trying to think. I think that puts me at 9. I think I was 9 in 2nd grade. And I'm 32 now. I'm terrible at math. Was that 23 years? So for 23 years, that sounds so weird to say that out loud, man. It's been my resolution for 23 years to stop cussing. Now,
how's that going, Jesse?
Chris, how the do you think it's going, bro? So every year, it's been my New Year's resolution for the last 23 years, right? And 10 years ago, it was 2012. I remember like it was yesterday. It was 2012, and I had legit gone 3 days, dude, 3 whole days without saying a cuss word. And it was amazing. It was phenomenal, dude. I was so intentional with it, and I was like watching my mouth and just to see if I could. It's just this fun little thing I do, but it's been my New Year's resolution every day since I was in 2nd grade. And I in 2012, like I said, I went 3 whole days, and I got caught up playing Call of Duty. I don't know if do you ever play Call of Duty, Chris? Are you big into video games or anything like that?
I am.
Okay, so have you played zombies? Like you remember a World of no, it was Black Ops, the Black Ops zombies.
Halo?
What, Halo? What? No, Black Ops.
I want to make
Call
sure.
of Duty Black Ops zombies.
Okay, got it.
So I was playing Call of Duty Zombies, and it was day 3, dude. I shouldn't have been doing it, but I did. Somebody pissed me off. I dropped an F-bomb, and I was like, well, I got 362 more days to get it all out so I can start the next year. So most of the time, honestly, I probably make it till about noon on New Year's, and then it's like, man, I got 364 and a half more days. So, but anyway, that'll be my New Year's resolution tomorrow, per the usual. So that's kind of my big one. But just like you were saying, man, just on top of all the other goals and things we have going on, I'm pretty excited for it. So
that's phenomenal. And one thing I just saw in a comment, and guys, we're letting actually a couple of people we're really get into nitty gritty in about 5 minutes, but more so, one thing that just stood out to me is Freddie. This was very, very intentional for me. Very intentional. Getting uncomfortable. I can resonate with that 1,000,000%. As those who may not know me, I love getting uncomfortable. I put myself in uncomfortable positions every single day. You have to. In order for you to grow and be successful and be where you want to be in life, you got to put yourself in uncomfortable positions. You got to be nervous. You got to want to do it. You got to go after it. If you don't have those nerves, you're too comfortable. A lot of people got 9-to-5s, W2s, and they're just comfortable. They're very comfortable, right? And that's not saying it's a bad thing, but a lot of people I speak to, they have a lot of goals, ambitions, and all that good stuff, but they don't want to be uncomfortable. But Freddie, I'm glad you stated that. Good seeing you again back here, man.
Chris, real quick, not to go on too long, but I just want to ask you about that real quick. Like, why, for somebody who doesn't know, if somebody's just watching this, we've got quite a few people in here watching this right now. For somebody who's watching this and they want to get into real estate, or they want to try something new, or they want to learn a new skill, why is it so important to get uncomfortable? What does that mean? Like I hate getting uncomfortable. People just have a natural tendency to hate getting uncomfortable. Why is that so imperative, do you think? Like, why are you so freaking intentional with that? Because, and I've shared this with other people before, man. I've said it on this show, but that was one of the first things that I noticed about you. And you have helped me in my personal development and growth because you're so intentional with those sort of things, man. And I love that. But I just want to get your perspective on that for anybody who doesn't know or doesn't, just why is it so imperative to get uncomfortable?
Because you don't want to look back and put yourself in a situation. What if I did that? What if I attempted to try to reach $100,000 a month, $100,000 a year, whatever that may go, that or a dream that you vision on a daily basis?
Mm-hmm.
You just don't want to look back and regret anything, right? And
100%.
I could put it in this perspective. I want to see in the side chat, and we're streaming from different platforms. We got YouTube, Facebook, we got StreamYard as well. Put in the comments if you have a W2. Just put me in the comments if you have a W2.
Not Chris James, but just type me.
So if you have a W2, and I want you to really ask yourself specifically, are you happy, or would you be happy if you was in that same position in the next 50 years? And I really want you to think about that. Is that something you want to be doing? Having a 2% or 3% increase a year, and your boss is making millions off something that you could ultimately be doing the same thing. And if that's the case, if you want to be in that position, power to you. Keep doing what you're doing. I'm rooting for you. But for the other ones who really want to achieve success and be in that power, in that position of not just power, but position of wealth, freedom, gratitude, and more so, gratitude. Be thankful for what you could achieve. Be thankful for that you're alive. And it gets to a point where specifically nerves kick in and people stay stable. And when nerves kick in, you need to push through that. You need to kick that door open and to run through it. And that's what I do. A lot of people don't understand, like literally me personally, like full transparency, yesterday, I had a call for about an hour with an individual, which I was nervous. He was an extremely higher caliber. I'm not going to say his name, but he's literally making, no exaggeration, he's making $175,000 a month, faithfully. And he had the financials to prove it.
I thought for a second there, Chris, I thought you were talking about Tom Cruise, and then you said 175. I was like, okay, no, it's probably not him. He's probably making a little bit more. It's probably not Tom Cruise. But take your guys' guess.
but, but more so, yeah, it's just those kind of conversations. You just never know what kind of opportunities you're going to come across. You just never know unless you actually go do it. So just to bring this back on home more, so get uncomfortable. Just really get uncomfortable and be yourself. And there's always something you can provide. A lot of people always say, how can I provide value? What does that really look like? Just be yourself. And literally, it would go a long way. It really would. So again, guys, I see a couple of Facebook users. Guys, please grant StreamYard access to show your name so we can know whom we're speaking to when we see you guys in the comments. Thanks for showing up today. We're live from YouTube, Facebook, and also StreamYard Air. So again, guys, if you got any questions or concerns, please put it in the comments. Jesse, I, and our amazing partner in crime, Mark, will be coming up here shortly. And again, guys, thank you for being here.
Thank you, guys. So, yeah, to go along with what Chris was saying, yeah, thank you guys very much for being here. We really appreciate it. We acknowledge that you guys, this is Saturday afternoon. Unless you're, living in Alaska and you got 9 foot of snow up to your window sills, I'd imagine you guys probably have a lot of other stuff you could be doing today. So yeah, we really appreciate you and acknowledge that. So thank you guys. But like Chris said, we have an amazing guest coming on today. We're going to be talking about some phenomenal things. And part of this relationship that we built with our guest was because of getting uncomfortable. We put ourselves out there. The more hands you shake, the more money you make. And it's led to Third Mind having a lending division. That's right, guys. We are a freaking bank.
Love it.
Talk about getting uncomfortable. Chris, do you ever think you were going to be a bank?
Not at all. Not at all.
Weird.
Not at all. But again, this is going to be an amazing experience for a lot of you guys, because I know everyone always asks, what is the next step? What does that look like? What is, some of the terminology means? And, Mark is definitely going to go through a lot of that with you, the nitty gritty for exactly what that really entails, because a lot of people don't know where to go or where to start. And a lot of people don't understand, like, it's a difference between gator lending, private money lending, and then we have loan products. Those are all 3 separate categories. And Mark is definitely going to talk a lot about the loan products that we offer. It's going to be phenomenal. It's going to be phenomenal. I'm pretty excited for this one. We're probably going to do like a mini series with this specific lending division. It's going to be amazing.
So today is part 1. Yeah, Chris?
Yes, it is. It is part 1 of many.
Amazing, dude. Well, let's bring up to the stage Mark, dude. Oh, crap. Oh, we hit him at the same time.
Hey, guys.
Mark!
Hey,
the man.
I think that was the best.
Going on, dude?
That was the best intro I think I've ever had in my entire life. That was amazing.
Well, dude, you are like the face of this whole thing, man. And you're like Marky Mark, and Chris and I are your funky bunch, dude.
I don't know about all that, but I like it. That's cool.
Well, dude, we really appreciate you being here, man. Thank you so much for taking the time. I know you're not home. You're out in California spending some time with family. You're out for the holidays. How was your Christmas, bro?
It was beautiful. I love the opportunity to spend time with family. So it's been great, man. I'm very grateful. Blessed to have friends like you. Blessed to have great family. So.
Well, dude, thank you so much for being here. Again, we know that you could be out doing, other things and spending your time with your family. And I know we were kind of chatting a little bit before this, and this is kind of the first time that you've not had to work. You not had to shift your schedule and have Christmas on a different day. You got to spend Christmas, with your family. And so we really acknowledge that, and we really appreciate you, being here, man. I think this is going to be absolutely phenomenal. So again, Chris is head of our lending division, guys. And we're going to be talking all things money. So coincidentally, I think there's, a lot of investors that could be, that could, use some money. I think. I don't know. Do you guys need money? Is anybody out here looking for some money? Let's get into some money. Let's figure out how you guys can get your hands on some more money and how we can all work together going to 2023 with a bang. But before we do, real quick, Mark, every superhero has their origin story, right? Tell us a little bit about yourself. Like, what is your origin story? How did you get, to where you are now and involved in real estate?
Yeah. So I, initially, my stepdad played a huge part in that. He was investing in large commercial buildings. He was a broker, agent. So he began managing. Instead of taking his cuts, he was smart. He get 1% of this commercial deal, 2% of that commercial deal. So it really started to get me thinking, watching how much money was rolling in, and the kind of lifestyle he was living. He's golfing, 6 days a week. I mean, he had an amazing schedule. So, but unfortunately, he passed. So I didn't really get the opportunity to ask him a bunch of questions and pick his brain. But it definitely sparked the interest. And then, then it started reading, constant learning. YouTube's been amazing. You guys have been great. I mean, there's a lot of things that really came into play. So yeah, I mean, that's it in a nutshell.
Interesting. I love that, bro. Thank you. Thank you very much for sharing that. So what are we going to get into today?
Yeah. So, a lot of conversations I've been having lately, from the high level is, what are the lending products? What is a QM loan? What is a qualified mortgage? And then all the way through, what products does that look like? What products do we specifically offer collectively? What can we give people? And then also, I wouldn't mind opening up at the end a little bit for some Q&A if people have specific questions. I know we like to get creative too, and that's great. I totally understand that. When I take my lender hat off and put my investment hat on, I totally get the appeal. And if we can't dive too deep into the recording because we don't want it to go too long, I'm happy to do one-on-one calls with people as well if that is beneficial or people would find value in that.
Phenomenal,
Absolutely.
bro. Yeah, that would be amazing. Thank you. So where should we start with this? Where should we kick this off?
Well, let's just do we have the slides up right now? Can I throw that up here? It's not a lot. I don't want to do death by slides here. But some to keep us on topic. That way, if questions are rolling in, we can pause and address the questions. And then I can make sure I'm not dragging things out too long here.
Love it. Yeah, that would be amazing. And guys, again, Mark is a creative finance guru, especially, so like he said, when he takes his loan officer hat off and puts his investor, he's it's neat because he can bridge that gap. You're not trying to explain creative or what the Morby method is or something like that to a traditional lender or something like, where it's almost like trying to talk to a seller through an agent or a broker or something like that. You got to articulate yourself in a certain way, and then they've got to be able to sell that to the seller. So that's not the case with Mark. As a matter of fact, this relationship, we met Mark through a creative deal. Mark bought a sub 2 off of Chris Collin and I earlier this year, and he did a lease option with it, and it's been going fantastic. It sounds like so. We're very excited for that relationship, and again, Mark, we really appreciate you being here. Thank you so much.
Yeah, again,
so let's go ahead and let's click. Yeah, bro, let's kick this off. So, can everybody see this? Can you guys give me like a yes in the comments? I think this is the first time we've ever done kind of like a slideshow, share your screen thing on here, isn't it, Chris?
Absolutely. First time.
Perfect.
And guys, we're definitely
cool.
going to have Q&A at the end. We're probably going to give it like 10 to 15 minutes for Q&A. I'm definitely monitoring. I see Kenya. I will definitely get to your question. Chris, I will get to your question as well. And also Facebook user, again, get the StreamYard access so we can see who we are speaking to. But we'll definitely get to Q&A towards the end.
Mark, well, this is up. Sorry, I don't want to jump ship. I guess we can open it up for Q&A, but if you guys have questions on anything that we're talking about presently, like feel free to throw that in there and we can kind of address these as well. But here is one from Iffy. Mark, would you be open to providing debt quotes to those of us new to the commercial multifam space? Yeah,
we can definitely run through some quotes. Yeah, that's easy. The product specifically that Third Mind REI lending division has, the bread and butter is 8 units and less. But if we wanted to look into larger multifamily, I know we've heard that call and we're looking for solutions for it. We have a short-term and intermediate term commercial debt product. They're bridge products, and we can definitely chat more about those.
Amazing. Perfect. Now, you guys, shoot, I forgot where I was going with that. I'll come back to that. All right.
All right, let's kick it off.
Let's do it.
Oh. All right. So, people want to know, what is QM? What is a non-QM loan? And QM stands for qualified mortgage. And it's basically everything that doesn't fall under the Freddie, Fannie, buckets. So anything outside of that is essentially what we're talking about here. And I'm not going to read these slides. You guys can, look at these. I can also send out a copy too if you want to go over them after. I'm happy to do that. In addition to that, I also did brainstorm some questions last night to provide more value to everyone on today, including you two, on what questions I would have liked to know as an investor before I got my LO, before I became a lender. What does that look like? How do I interview a lender? What are the pertinent things to ask about before I get a mortgage, right? What's that first conversation look like? So I'm happy to send those out as well. But back to the QM question is, so we know what it is now. We know the name of it, and we know basically what it's not. So then basically you see the examples here on what non-QM product, loan terminology looks like, and kind of how those boxes are fit. And then basically the pros that we're seeing with these is they're easier to apply for. There's less documentation. There's less underwriting. Well, there can be less underwriting. There's lower credit minimums than Fannie Freddie oftentimes. Generally, that comes with, reduced leverages as well, because, that's how these QM loans kind of control their risk in one way is leverage. But essentially these, especially our loans, the lending division, we don't report to credit bureaus or credit agencies. So you could essentially have as many of these loans as you qualify for, as the asset qualifies for. Again, these are asset based. They're not reported. They don't affect your front end and back end ratios when you go to get a conventional mortgage. Typically, some of the cons that come along with these are cost. Sometimes they're more expensive. Typically, we're anywhere from a point to a point and a half higher than conventional rates. But it comes with all those pros as well.
What is a point? Oh, sorry, Mark. I didn't mean to interrupt you. Like, for those who don't know, like, what is a point? What does that mean? Like, what are points in regards
great
to
question.
a loan?
Yeah, so points are what basically a fee charged on the loan balance. So, say you have $100,000 loan that you're getting and you have 1 point. Well, that's going to be 1% of that 100,000, right? So you're going to pay that up front, and that the term for that again is that's called a point, and that's the cost to originate or a cost to get the loan.
Okay.
And there's typically 3 or 4 costs associated depending on what type of loan. Points, fees are 2 different ways. And then, you have your interest rate. So from a high level, that's basically what cost of debt for these loan products, what that looks like.
Okay.
If you get in, and we'll dig in a little bit here on, rehab loans, those typically come with one more added cost. And those are draw fees, but we can talk about those more later.
Okay. Now, we offer a variety of loans. We do DSCR, bridge loans, fix and flip loans, construction loans. When you're talking about Q&M, is that the same as like a recourse and a non-recourse loan, or is Q&M and recourse and non-recourse, are those different? It's
different. So a non-QM loan is basically every loan that you just listed. It's every loan that doesn't fall into the Freddie guidelines, right? And then, so if we're talking about recourse versus non-recourse, as far as terminology goes, we're talking about who's the guarantor, who's held liable if this loan defaults. That's what recourse versus non-recourse means. Do I have the recourse to go back towards the borrower to get more money from them to pay the debt obligation?
Okay. Now, you mentioned it doesn't go on your credit. Did I hear you right when you said that?
Yeah.
Which is the same with a non-recourse, but they are separate, correct? Or am I wrong here?
So it depends. So with a non-recourse, non-QM loan, it's not going to be on your on your it's not going to show up on your credit. If it's a long-term loan and they run a hard credit inquiry, then you'll see a credit inquiry on there, but you're not going to see the impact to your front end and back end for your qualifying for future loans, conventionally. That's
okay.
Yeah. Does that make sense? Did I explain that?
Yeah, I think so. I got it.
Okay.
Somebody had a question real quick right here. Again, Chris and I will just kind of throw this out as reminders, guys. But go in there and allow, if you look at, I'm assuming everybody who's watching this, who's showing up as Facebook user, I know on your end, you guys and everybody else underneath in the chat can see the name. But for us to pull you guys up here, you've got to scroll up and click on that link and allow StreamYard access to display your name. So if you guys haven't done that yet, please go in there and do that. That'd be extremely helpful because we'd love to know who we're talking to. But Mark, what do you think about this question?
Yeah, so great question. We could talk about this one probably for a hot minute here. But just to address the question at hand, concisely, I think, so the bridge products, those would work towards, if you were doing, if you were doing a basic flip rehab, if we're talking about these mixing creative strategies in, I think the Morby method comes to mind. I'm trying to think of what else. These are all new loans. So anything that has an existing loan in place and we're trying to take advantage of that probably won't work, right? We're talking about new debt. So any circumstance where you would need a new debt product. If we're talking about sub 2, then yeah, that's probably not going to apply, right? Because we want to keep the current debt in place, and this won't be a second lien position. You'll have to seek other routes if you're looking at second liens, like private money lenders, HELOCs, things of that sort. That we don't do, but I can definitely have a conversation and give you some guidance on where to find it if we can.
Awesome. Now I know you mentioned the Morby method in there. I think it's a pretty big entrance strategy right now, especially with us with the market kind of shifting, and you got a lot of sellers who are still kind of in that mindset of, no, I want more for my property. I want a down payment. They're not really acknowledging that the market's kind of going down, and we're seeing this shift. So for those who are looking to do the Morby method, that is something that we can help with. But it's probably going to be on a case-by-case basis, correct, in terms of just structure and the different options we offer when it comes to that.
Yeah, so our products, like many other products, typically will say no to second lien positions altogether. They don't want to be in second lien position, and they don't want to have a second lien position behind them. And we understand that. And there are some things in the pipeline that we're working on to make it a little bit more user-friendly. Without saying too much, we'll just leave it at that. But if we have specific questions about, maybe you're trying to execute on a Morby method and you want to see what that financing situation needs to look like in order to make it fit, I'm happy to have that conversation, and we'll share contact at the end.
Awesome. Perfect. So if you guys are looking for Morby method, like I said, I know it's a big thing. I feel like every time I come onto Facebook, everyone's asking more about the Morby method. So please reach out to us, and we can kind of have that conversation and put you guys in touch with Mark and see what that looks like for moving forward.
Mm-hmm. Yeah. So, Jesse, you mentioned some of the lending products that we're able to offer. We have short-term lending products for rehabs. We have long-term lending products for rentals. And you can do one or the other, or you can do both. Maybe it's a project that needs some renovation, and then you're looking to put some long-term debt and rent it out, and or XYZ exit strategy, right? Well, we have both products there. And again, so the value add financing, we can include renovation or we can not include renovation. Typically, we're at 80 to 85% loan to cost, which is your cost basis for the acquisition. That's the purchase price plus the renovation budget, and we'll cover 100% of the renovation budget and up to those limiting factors further down. So you might have to come in with some money down, but ultimately it ends up being a lot less money, and we can go through examples too on what that looks like, and what that funding full picture painted like moving forward. And then we have the DSCR loan product. The DSCR stands for debt service coverage ratio. And we typically run ours at a ratio of 1. It can be a little less. It could be a little more if it's a higher cash flowing asset. But basically what that means in a nutshell is that, your gross rents less your management, HOA, taxes and insurance. So you get like I don't want to say net operating income because that's not right, but like a pseudo net operating income, right? Like that number is then taken over your cost of debt and at a ratio of 1. So it won't let you negatively cash flow. So that then it'll taper down leverages based on that. But if your cash flow is very strong, then you'll get to that 80% LTV, and we'll be able to fund there.
Now, what does that mean for people who don't know? Like, what is LTV? What does that have to do with anything?
Yeah, so LTV is your loan to value. So it's the maximum amount of loan that you can get for the value of the property as it stands right now.
Okay. So if a property is worth $100,000 at an 80% LTV, you're saying that you guys will finance up to 80,000. Did I understand that correctly?
Correct.
Okay.
Yes, thank you for that.
Yeah.
The cool thing about these products is, so if we're under a time crunch, we can close these bridge products in a minimum of 7 days. I mean, we prefer more, right? Because we don't want to put ourselves in a interesting spot. I mean, I've closed loans in 48 hours before. We can close loans fast. That's not the problem. It's the third parties. We want to make sure that our experience, both with the borrower and with the title companies and the appraisers, that everything's very fluid, and that if we run into a hiccup, we have ample time to solve those problems. Whether it be a low appraisal or, whatever problem that you could think of that might come up. So, so we want a minimum of 7 business days to close our first loan, but, with repeat borrowers, we can close it in 4 to 5 comfortably. And then as far as those long-term debt products go, those DSCR, those debt service coverage ratio loans, we're looking at 2 to 3 weeks. Again, conservative. But there's a little bit more, moving parts with those long-term loans. They want a full appraisal. They're going to want, some certain things behind the scenes to happen, just to make sure that, those checks and balances are there.
Absolutely. Okay. Well, with this being the elephant show right now, are you familiar with the Elephant Challenge, Mark?
I am.
Okay, cool. Perfect. So we've taken a deep dive into multifamily. Now, one of the things going into multifamily is obviously if we can get it on creative financing, that's kind of the cherry on top, right? But probably the majority of the time you're going to be using somewhat sort of traditional financing or something like that. Now, specifically with DSCR, can you do commercial and residential DSCR loans? Is there a limit? Like, can you go buy a 100 unit or a 50 unit or anything like that on a DSCR loan, or how does all that work, and how does it differ from like conventional financing?
Great question. Thank you. So as far as multifamily goes, I know we kind of alluded to this earlier. Less than 8 units is easy for us to close. We can do portfolio loans, as many single family home loans as possible. I understand the focus is on multi right now, and we can go up to 80% on those short-term or intermediate term time lengths. And typically right now, until we get, a longer term product, we're looking at a 3-year with 2 1-year extensions for our intermediate term bridge product. And that'll do multifamily at 80% loan to value. Again, we can dig in a little bit more on those. Those are a newer product to us. Again, it's been one of those things where we've had a lot of interest, and we want to bring as many products to the table as we can. So we're putting effort in right there in order to basically fill the gap, to scratch that itch.
Awesome. I love that, brother. Nicole had a fantastic question. How long do I have to own a property before I can refi to pay out my seller and PML?
Yeah, so if we're looking at a long-term debt product, and we want to put DSCR debt on that product, you're typically wanting to, different lenders will want you to season 6 months. Some will want you to do 3, and we're at that 3 mark. We're at the shorter end of that mark. If we're talking about bridge debt, there's no penalties with this product on refinancing early. If you get bridge debt and you want to do a fix and flip, or and granted, this market doesn't really support a whole lot of fix and flips, but say you wanted to put long-term debt on it right away, you finish the rehab in 1 month. Well, you're rewarded. You don't need to pay any penalties or anything, no prepayment penalties to close the loan out early and put good debt on it. But they are going to want to see for long-term debt that 3-month seasoning period, just to evaluate accordingly, I guess, or appropriately, I should say.
Perfect. Awesome. Angel had a fantastic question. She says, just to be clear, if, for example, you have a property with an ARV of 100,000, you will lend up to 85,000 to cover purchase and rehab, both, correct?
Yeah. So if you have you're talking about after repair value of 100,000. So if we have a purchase price of 100,000, and then say the rehab is 50K. So our total loan to cost is 150. So it'd be 80% of 150. Does that, or 85% in your example, you used 85, right? Yeah. Say it was 85% loan to cost, which I use calculators because so it'd be 127.5 is the loan amount we'd be looking for in that example that you gave. Does that make sense? So you're going to take your purchase price, and this is just one parameter. They call it LLPA. This is one parameter for the loan, and it's your 85% loan to cost, and that's your in your example 100,000 purchase price, 50,000 renovation budget. We'll fund 125,000 of that combined amount, that loan to cost.
Got it. Perfect.
I see another question about lending in rural areas. We can lend in rural areas, Nicole. But typically with rural areas comes reduced leverages because lenders see those as higher risk. So they're going to want to balance that risk a little bit. And one of the ways that they balance that risk is leverage. It also might be instead of leverage, or maybe in addition to leverage, depending on the market or the area, it might also be more expensive. It's possible that it would be more expensive as well. Again, another way to mitigate risk.
Awesome. Thank you, Mark. Appreciate that, man. Gosh, dang, what a wealth of knowledge, man.
I don't know about that, but trying to provide it. We talked to you guys, it hit home earlier. You guys mentioned New Year's resolutions. I don't like New Year's resolutions because it's almost like you got to wait till the first to start them, right? And I want to start it now. But having said that, I think this year I'm making it a hard stop to provide as much value to people I come across as possible, and just to see what happens. That it seems like if you make an easy goal like that, a lot of things tend to come to fruition. So I'm really hoping that we can start here on a good foot today.
Oh, bro, guys, I mean, these comments are awesome. Guys, if you guys are getting value from Mark being here, please show him some love in the comments. This is phenomenal. This is the first time Chris and I have had Mark on here. So, really take advantage. Mark, thank you again. Really appreciate you, man. This is phenomenal. I mean, I'm learning a bunch of stuff as well.
So I've got DSCR parameters up here, kind of like the high points of them. Up to 80% loan to value. Again, we kind of mentioned that, one DSCR, it sometimes is 1.05. It could be 1.25 for extremely high cash flowing assets, or it could be higher just if it's a cash out refi, and typically the cash out refis are reduced leverages about 5%. Could be more depending on the asset. Maybe it's more rural, like we discussed earlier, or maybe it's just outside of the buy box just a little bit, and we need to mitigate some risk points there. But typically we're 75% loan to value with cash out, 80% loan to value with purchases. We like to close in entities. So can we close in your name? Yes, but we prefer to close in entities. A lot of people talk about it all the time. Like, well, what's the point of, taking all this action if you're not set up appropriately, right? So start your business, get that entity rolling, get all the claim, talk to a tax professional, get all that stuff set up, and then, and close your properties in your entities. Again, no limit to these loans, and they're not reported. Let's keep moving here.
So guys, if you guys need an LLC, I saw Yvonne said LLC needed. I don't know if that's saying that you need an LLC or if you're just kind of reiterating what Mark said, that you need an LLC. But if anybody needs help with LLCs, please let us know as well. We have a fantastic relationship with PCS as well. So we're happy to help, facilitate whatever it is that you guys need. Mark, somebody asked up here. I just want to touch on this because I know on one of your slides you said you on one of your slides you mentioned that we can service 45 states. I'm trying to find where it is. Somebody said somebody asked what states do we not service?
Yeah, so this list is growing. We're pushing the envelope. We like to push the envelope, because it gets, it provides more value to the borrower, and we're able to do things that maybe other people wouldn't be able to fill a need. But right now we're having a hard time funding in Alaska. I know Jesse loves Alaska. We're working on it. And then, some like Hawaii is difficult for us, those outliers. But for the most part, yeah, I mean, it's fair game.
Awesome. So if anybody's wanting to get into some multi-room igloos up here in Alaska, just be patient. We're working on it.
Awesome. So, so the value add, product we talked about, 85% loan to cost. There's some other parameters in there as well, that we can, if you need a specific deal priced out, Third Mind team has a link that you can submit any loan submissions there, and we can chat in detail about your specific project. Typically, these value add rates, again, are in the 11 to 13 range. With the DSCR loans, you're looking at 8.5 to 10, low 10s. As of right now, that's subject to change. We got, rate hikes coming up potentially in Q1, kind of unrelated, but also related a little bit. We kind of run right in line with those. Again, we're about a point to a point and a half above conventional financing. So, that's typically how we're priced out and where we're positioned. Closing timelines. We talked about non-recourse. Foreign nationals are allowed. It comes with some caveats though. So we can fund to foreign nationals, and we can talk, more in detail. Again, this can be another subject we cover in I just don't want to take too much of everyone's time here and kind of get the high points across and then open the floor. But we can definitely touch on that. Here's an example here of the value add product. I think it was Jennifer that brought up the great question about the example there. So I don't think we need to dive too deep into this one. But you guys get the general gist of what these products would look like. The value, I do want to mention though, the rehab is represented as a holdback. So what that means is, essentially the full picture of that is someone will come in, they'll pay the down payment, and then there's a liquidity requirement that we're going to request that you have in your bank account. That liquidity requirement is not your down payment. It's more than the down payment, because we want to know that you can fund a little bit of the rehab to start it. And basically, we're going to reimburse you as you go. So other companies like to do an in-person meeting where someone comes out to the property and inspection set up. It kind of adds a bottleneck to the whole project. And a lot of people don't like that. So we actually do a virtual meeting. So you'll FaceTime or do a virtual meet with the collateral or the underwriting team. They'll jump on, they'll take a look at your project, and they'll give you your next disbursement, which is, essentially your next loan balance check to be put towards your rehab. You'll only pay interest on drawn funds. So if you pay the down payment, you get your initial loan, you decide, you know what, I'm going to be out of pocket for the remaining balance of the rehab. You're not going to pay any money on the holdback unless you take draws. So here's the link. You know, I can also send it over the chat maybe and blast it out so that you guys have that link handy.
Chris,
yeah,
sorry, I didn't mean to interrupt you. I was just gonna see if Chris, would you mind throwing that link in the chat?
Yes, which one? My internet is pretty laggy right now. I'm sorry about that.
No worries, dude. You're good, man. That thirdmindrei.vontive.app/login. So this is the link for you guys to actually apply. And yes, the loans are direct through Third Mind.
Correct. Also, if you guys got any questions or concerns, there's the email I do have it on the screen with lending at thirdmindrei.com. So any questions, concerns, you can also reach out to Mark that way. Mark, it's totally up to you if you want to give up your phone number.
Yeah, we can
definitely. Do you want to do that? Oh.
I'm totally comfortable with that. I'm totally comfortable with that.
Okay.
Either way, they're going to get a call from me anyway. So essentially what that looks like is they're going to go and they're going to click the link. They're going to fill a submission for the project that they're working on right now. They're going to get a phone call from me within, you know, a couple hours. So I want to say 2 to 4 hours max. They'll get a call from me. I'll be bugging, knocking at the door type deal. And you know, just basically looking for some more detail on the project, and then bring pricing to the table to see what fits and what doesn't. So that's pretty much what that quick picture looks like. Yeah, and then after an offer is released, the offer is accepted, I send it to the underwriting team, and we're off to the races. So that's typically how it goes, and that's also when the timeline starts. You know, we talked about 7 business days for the bridge loan for a newer investor or someone that hasn't done any deals with us yet. That's when that 7-day timeline starts. So plan accordingly, you know, with your negotiations, you know, if you need a little bit more time with the sellers that you're working with.
So again, guys, I just posted it right in the side chat. Facebook, I just posted it to it directly, so you should be able to see it. So you do have to sign up first. And then once you sign up, you should be able to see what your options are or whatever you're looking for to proceed. And again, as Mark stated, he will definitely be reaching out to get more information, whatever that look like.
And when you log in too, there's also a section to get pre-qualified. There's also a section for proof of funds. So if you're making active offers and you need a proof of funds, there's a couple things that we can do. Also, you know, you can either it's a secured site. You can connect it through Plaid, the third-party connecting servicer that kind of gives us visibility on what liquidity looks like in certain accounts that you choose to link, or you can update or upload the past 2 months worth of bank statements, and we can give you proof of funds based on that. So it's really easy. All of the systems and tools that we have in place, we have an engineer team working on 24/7. They're killing it. So any updates that we see, any clunks or anything like that, I mean, they've already ironed out. We told them we wanted to automate a pre-qualification thing so that we wouldn't need the resources to be allocated to that side of the department, and they answered. So we're constantly making things better day in and day out. They're amazing.
Phenomenal.
Mark, real quick. I'm sorry. Can you go back to that previous slide real quick?
Yep.
So right here, it says experience verification under required documents.
Great.
Now, what if we have, what if there's somebody who is brand new? They've never done a fix and flip, but they go and they partner with somebody who's done a handful or more than one. Is that something that they can use and use that as kind of a more or less a voucher or, credibility?
Thank you. Yeah. That's
these loans.
Phenomenal question. Again, awesome prompt. So we can start funding for an investor that is brand new, that has no flips under their belt from day one, all the way through the investor that has 100 flips in the last 3 years. This is just a way for us to manage risk. So when you tell us you've done 0 deals in the last 3 years, that's fine. Just know that instead of 85% loan to cost, we're going to be at 80% loan to cost, right? So there's going to be a slight pricing increase and a leverage decrease, just to mitigate for those risk factors. Now, to your question, Jesse, and again, I appreciate the prompt. If one of the people in the chat wants to partner with Chris or wants to partner with Jesse, and their flip experience is over 10 properties in the last 3 years, then you guys can basically blend your experience together on an entity. That's why you would create an entity together and purchase a property. And now we can count everyone's experience together, everyone's liquidity together, and so on. Yes, except one or both needs to be a guarantor on the loan. So you guys gotta, who has the best credit score, who looks the best on paper, and let's get the best pricing from that partner is essentially what you'd be wanting to do.
Love that.
Perfect.
As far as the scope of work goes too, we can talk a little bit about those value add scope of works here. That's basically a quote from a contractor with line itemed, amounts in there. What we're looking at when we look at these scope of works is this a complex rehab or not? And what that means is, are we moving load bearing walls? Is there any fire or mold or damage repair? Is there remodel, more than the amount that it's going to cost to acquire the property? Sometimes that raises a flag, and makes it categorized as a complex renovation. There's a handful of categories there, on that scope of work template that you can fill out. If you don't have one, that indicates whether it is or is not. Are we digging down into a basement? Are we finishing a basement? Are we adding square footage to the property? Things of that sort. And if those are complex renovations, again, that's seen as a risk factor, and we might need to, reduce leverages a little bit, or increase pricing, or make some necessary changes to get comfortable, especially depending on experience, right? Because we ultimately want to know that someone's done flips in the past, and if a problem arises, they have the contacts and or resources to mitigate those problems, right? Because I don't know how many people in this chat have knocked down a wall and found 10 things more that they needed to do, right? I'm sure we've all been there. I've been there. So
I got another quick question for you, Mario. It's actually kind of a two-part. I know earlier you mentioned 2 weeks, and I just want to be extremely clear in this question. Did you mean that people can get approved in as early as 2 weeks, or they can have money in their pocket in as early as 2 weeks? And then the second part of that is, do you allow for upfront disbursements?
So first question, if we're talking about the timeframes, those timeframes typically start when we send it to underwriting. So it doesn't account for the time that it takes for us to jump on a call. It doesn't account for the time it takes for me to generate and send over an offer and for you to accept it. And it also doesn't account for the time that it takes for someone to upload the documents. Now, the 3 things that we listed essentially could take 2 hours, right? 1 hour, maybe, if someone's really on top of it and has all their documents together. Or it could sometimes it's taken 5 days or a week, right? So that adds to our timeline now. Now we're not looking at 2 weeks anymore. We're looking at 3 total, right? So from the time I send it to underwriting and I have all the docs that I need, that's when the clock starts. That's when that 2 to 3 week period starts for those DSCR loans, and or 7 days for the bridge.
Okay. Got it. Thank you.
And then what was your second question? I'm sorry.
Do you allow for upfront disbursements?
Great. Yeah. Phenomenal question. So this question actually comes up quite a bit. So thank you again for that prompt. So this typically is in relation to, going to auction, right? Am I understanding that appropriately?
Correct.
Okay. So auctions are tough because we do not provide funds in advance. However, if it's an online auction, if you're doing it through like Hubzu or auction.com, as long as we can ensure that title is clear, and we can get a report, then we can make accommodations. But we typically don't give cash in the form of like cash to walk into the auction, right? If there's a little bit more time to gather the information that we need, we can fund through an auction, but it just comes with some red tape, is essentially what I'm saying.
Got it. Okay.
Yeah. Mm-hmm.
So it sounds like it might be kind of a case by case basis.
Yeah, it's the mode and the property specifically itself. With foreclosure auction sales, we don't typically support, but we need let's see, typically acquired with a sheriff's deed, or they come with clouds on title. So yeah, so that reiterates the conversation earlier, or the comment earlier. We need clear title in order to execute on something like this. Otherwise, it's just not possible.
Raj. Okay. Awesome. Thank you.
Yeah, I just didn't want to misquote. I have some notes over here on the side I wanted to reflect on real quick.
No worries, guys. You asking amazing questions in the comments. Thanks again. Thanks. These are actually very good questions. And Mark, I'm not for sure you saw the one about the contractor one.
I did not.
I wasn't for sure if we. I mean, go back up there.
I do see one here that says Gator lenders fill in the gap for the 25K. The Gator lenders can. I mean, I think that was a scenario where we were talking about the down payment being the remaining amount. And in that case, that I don't think you would want a private money lender or a money partner. You wouldn't want a Gator lender. We're talking, if we're talking about a down payment, we're talking about more than just transactional funding, right? So yeah, we're talking about an actual partner on that deal that's willing to keep that 25K in for however long until you can pay them back, whether it be over time or through refinance or whatever the strategy is.
Absolutely. And Facebook user I just signed on. I see it's Glenn Julian. Yep, you're correct. Because they're still talking about far as the LLC and what does that look like. So more so, you just got to build one LLC. If it's 4 partners, put all 4 partners within the LLC. Don't create 4 separate LLCs.
Correct.
Let's see. And so this is a good one from Joel. What are your thoughts about that one, Mark?
Based on the property and the cash flow instead of the credit, I would say both. Those go hand in hand, Joel. We have a minimum credit score need of 680 now. It's changed with the market. I'm not going to lie. I mean, with how volatile the market's been, it's definitely grown to be a little bit more conservative. So you need that minimum 680 credit score for these particular loan products. And yeah, cash flow is and property location and property components are important as well. It all comes into play to paint a picture. It's just a little bit different picture than what you'll see on the conventional side. Why only 8 units? I have 16, and I'm interested. Thanks for the good info. Yeah, why only 8? 8 is where we've been able to grow the majority of our business so far. Again, we're adapting, we're pivoting, we're trying to make those necessary changes to offer more products. But as of right now, our bread and butter is that 8 and less.
Here's a fantastic question. Whoops.
I think we both. There you go.
Could a seller contribute part of their equity towards the down payment?
Yeah, so that's a great question, and yes, they can. Again, that comes with a little bit of red tape. You're going to want to partner with that seller now, most likely, in order to get new debt with a product, with our product or a product like ours. So you're going to want to be on the same entity as the partner or as the seller, and they're going to want to be viewed as a partner. You can be the guarantor. You can have your operating agreement lined out saying the limitations of your partnership. Maybe they have no say. Maybe their equity is slowly bought out over time. However you want to set that up, but that needs to be structured a certain way in order to count that. Because again, now we're talking again about second lien positions, and a lot of these non-QM lenders aren't going to want second liens on their loans, and they're not going to want to be in second lien.
Yeah,
can you
that actually
finance?
That's actually a good segue right there from Frank. If we just recently closed on the house and have PML, can you finance the second possession?
Yeah, so we can't, not with the products that we have. I know there's some companies out there that offer, second lien positions for primary residential mortgages. If you're looking to add like an ADU or a DADU, which is just an accessory dwelling unit on the property to create more income for your property. There's also a handful of grants that California specifically is offering, at least that I've heard of recently. They'll help you fund like your soft costs, your blueprints, your permitting, stuff like that. But for us, as far as the second lien positions go, it's going to be a case by case thing. We're going to have a chat offline to see if we can help you or fund for you in that way.
Renita, and I'm also looking for a personal home. Do you finance for owner occupied?
Yeah, we don't offer financing for owner occupied. I would say if you're looking for owner occupied loans and you qualify, I would go 100% go conventional. Your interest rate's going to be a little less expensive. But yes, we cannot do primary residential mortgages. Looks like
good question, guys.
What if we use our own funds for the down payment? Would you be able to do the rest without the liquidity? We'll want to see some liquidity, right? The lender, us or whoever else, they're going to want to see that you have the money for the next three months worth of payments. They're going to want to see that you have enough for the down. They're going to want to see that you have enough for some of the rehab. We require 10% of the rehab, say, but other companies might want to see more. There's a certain liquidity requirement that people are going to want to know you have access to, whether it be, and this will be on. So I created I think I already mentioned it, but I put together a list of questions for you guys to have when you interview lenders. And one of those questions specifically talks about that. How do you recognize liquidity? Do you recognize liquidity or retirement accounts? Do you recognize HELOCs? Do you what do you recognize and how much of it do you count? Like for us specifically, we can't count 100% of your HELOC money. We can't count 100% of your retirement accounts, but depending on what type of retirement account, we can do 50%, we can do 80%. It really just kind of depends on what type. So if you don't have the liquidity too, and you partner with someone, we can count both liquidity, liquidity that each individual holds together as one in that entity. So you just upload personal bank statements and we can take a peek at both and say, okay, yeah, they have the required liquidity that we're going to recommend that's needed to close this deal.
This is an interesting one. Can you do a
DSCR
DSCR loans?
Sorry, Chris. I didn't mean
No, you're fine. All you, Mark.
DSCR loans with STRs. If so, any minimum seasoning on income? Yeah. So our loan products for short-term rentals, we can fund with a bridge product right now, and that bridge product will be 18 to 24 months. It's interest only, typically at 75 to 80% loan to value. There are DSCR loans that we can use. However, our DSCR loans are run off of market rents. So say you're getting $5,000 a month with your short-term rental, or it can yield that much, but market rents, according to the appraiser, only support $2,000. Well, our DSCR ratio has to be run on the $2,000. It can't be run on the, maybe what you're currently getting. Now, having said that, we're, and understanding the market and short-term rental appeal and rent by the room appeal, we are doing our best to accommodate market pivots because we understand smart investors like to pivot and adapt to the market. Well, we like to pivot and adapt as well. So, which is why we're offering commercial products, which is why we're looking into products that we might be able to fund rent by the room or short-term rentals, with greater leverages. We're just kind of, it's all stuff in the works right now. But unfortunately, with how volatile the market's been, certain things have gotten dialed back.
Yeah, absolutely.
Now, I know I asked you this question before, Mark, and I just saw it maybe about 10 minutes ago or something in the comments, but Puerto Rico, out?
Yeah, it's out. Yeah. Unfortunately, as of right now, Puerto Rico is out. I get the appeal, the tax benefits. But we're only statewide right now. We can't stretch it yet. But you'll be the first to know when we can, including Alaska.
Awesome.
Including
Sounds
Alaska.
good, bro. Sounds good, bro. I'm waiting on those AK loans, man. Awesome. Well, here, this is a good topic right here, man. 5 reasons a loan gets denied.
Mm-hmm. Yeah.
I love this.
In addition to that list, the lender questionnaire, I can also send out the states that cannot be lent in, so that everyone can kind of get full transparency on those. And when we say we can't lend in them, for a strong borrower with a lot of experience and great liquidity, we'll do our best to bend the rules. I mean, we'll go to war to make these things happen for people. It's just a matter of getting the right exception and the right borrower to fit those to really, push the envelope a little bit, which we're okay with doing. Less than 100,000 property value. We need it to be 100,000 or more. It's just really not worth it to fund anything less, and it's really difficult. There's just no appetite for those types of loans. Or those sizes of loans, I should say.
Shit. So Ohio's out. I'm just
Some
kidding.
Ohio properties,
I remember when I started marketing in Ohio a couple of years ago, man. And even all through the pandemic, dude, it was crazy because you saw like all these prices just 10xing of these houses, right? And you could still market in Ohio and go buy a property for 20, 30,000. I was just like 20, 30 grand won't even get you a cardboard box in Alaska. So I thought that was interesting. So if you guys are doing a lot in Ohio and you're wanting something $100,000, unfortunately, it's not somewhere where we will be able to help you out on that one.
Mm-hmm. Yeah. Unfortunately, yes, as of right now, it's still pretty tough to get those across. And then it also talks about 50K per unit for multifamily. A lot of those great deals that come through, I mean, sometimes we just can't fund them. I mean, you negotiated too good of a price sometimes, right? Or it needs too much of a rehab, and we just can't get there because of the price per unit, or the loan value per unit, I should say. And then you have your credit score minimum we discussed, 680. That less than 25K liquidity, that's subject to property, right? We say as a rough number, a minimum of 25K because of the loan balance of 100,000, right? So, we're typically looking for, a certain number of liquidity, and that's calculated on our end, but it includes closing costs, down payment, points and fees, and then 3 to 6 months of payments, as well as rehab reserves. So there's a handful of things that we're looking for. Again, that's not the down payment. That's not the amount of money that needs to be brought to the closing table, but it's the amount of money that the lender wants to see to get comfortable. Yeah.
Amazing.
So you said right here, a credit score greater than 680. Now, obviously that's a personal credit score. Can we also base loans off of like business credit scores, like running the Dun & Bradstreet, or?
Yeah. So if we're going to do
personal,
if we're going to do business credit, we're talking again about recourse versus non-recourse, right? And non-recourse loans right now are really tough to write, but it's not completely off the table. It's just a lot more difficult. I mean, you're going to have to supply a lot of business related information in order for any lender to get comfortable there. Just again, there's just not a lot of appetite for those types of loans right now.
Mm-hmm.
Oh, I just lost the screen here. There we go. There's just not a whole lot of appetite for those. So it makes it more difficult for me to write those because I've got nowhere to go with them. You know what I mean?
Mm-hmm. Sure. So,
and I just realized it says less than 680. So I think that little Pac-Man mouth should be facing the other direction. So that's okay. You guys get it.
Let me just make sure. So Facebook user, I believe this is Glenn again. Sorry, I missed this. It says right here, what is the max loan limit?
The max loan limit. Okay, so great question. I mean, there's typically not a max, right? So I think ultimately where we end up getting limited is the DSCR values. So if the cash flow doesn't support the $3 million valuation, then you're probably looking at really, really low leverages and talking about a ton of liquidity needed and a big fat down payment. So I can push loans through no problem at, 1.5. Anything over 1.5, I'll request an exception. But if the deal works, I mean, we're not going to have a hard time getting that exception. So I would say there is no loan limit. Unless they buy a portfolio in Ohio. That's awesome.
I love it.
Guys, if you're in StreamYard, you would get the slides and all that good stuff. I may have to manually send that out to Facebook and YouTube, correct? On my end. Jess,
Yeah,
are you
probably.
okay with that?
Yeah.
Okay.
Mark, are you okay with that?
Oh, yeah, 100%. Yeah. We can send the slides out. We can send the questionnaires out. And then also the list of states.
Perfect.
Yeah. And so this is the very last one. Again, I didn't want to death by slide here. But the last one being the competitive advantage, why people should use us, what we bring to the table. And yeah, sometimes we're not the most inexpensive, but we compensate and provide plenty of value in other ways. We're a relationship lender. You see our face, and in addition to that, we'll walk you through every step of the way. We're not going to leave you out to dry. We have quick closing timelines or time frames. We'll work with new and experienced borrowers. We're even faster for people that are already in the system. Your information carries over to the next because we have a kick butt, engineer team that's doing a great job for us. So you will, after we do our first deal together and get our beaks rep, pricing will get better over time as your experience grows. Leverages will get better. It's just, yeah, I mean, it's great. It definitely sets us up for success and ease. That's another reason why I think, people continue to come back is just, it's so easy, when you have a team that you've built and you can rely on that team to do their job and not worry about it anymore. Right. I mean, that's
100%.
how you scale. Right.
Yeah.
So yeah, that's it. That's all I got for you. Thank you guys so much for having me.
Yeah, bro. Thank you, man. Plus, one thing that you didn't include on the slide, though, so I just want to point it out, was that, one of our competitive advantages is we all got facial hair. So, we're all kind of, gruff mountain men here, And believe it or not, guys, I haven't shaved in 6 months. There's some facial hair on here. Okay.
Yeah, I actually just hit puberty like 3 years ago. So that's the only reason why I have facial hair now.
Dude, I hit a growth spurt last summer. So, man, we're winning. We're winning, bro. We really appreciate you guys being here. Again, guys, give Mark some love. This is just absolutely phenomenal. We thought this would be amazing to have him come on here. And like I said, he's out vacationing, he's spending time in California with his family right now. He took an hour and 12 minutes out of his day so far. So we're not going to keep him. But Mark, thank you, man. This was awesome.
Thanks,
I think a lot of people in here just getting a lot of value from this. I mean, there were just some fantastic questions in here. Do you mind? You got maybe another 5 minutes or so to kind of maybe do some Q&A
sure.
If you guys have anything specific that we have not covered yet, you guys have been asking some fantastic questions. So if you guys have anything left, we got probably about 5 minutes or so before we go ahead and close it up for the day. So if you guys have anything that, like I said, we haven't covered yet, anything you want to know, you guys have been asking some phenomenal questions.
I do see a question over here. It says they have a portfolio of 40 single family and multifamily units they're looking to get financing for. Is there a limit to how many individual properties you can lend with in a portfolio, or are you able to lend for the entire portfolio?
Ooh, great question.
If we can definitely lend on an entire portfolio, no problem. It's a lot of work, but we do it frequently, and we have done quite a bit of volume as far as portfolios go. You're going to be limited to the same DSCR limitations that you would have been if it were single property. We'll most likely break out, anything over 4 units will break out and put it in its own portfolio. And sometimes for ease of closing, for appraisers and title companies, we'll break it out into 10-unit portfolios. So we can do, I've done 6 10-unit portfolios before instead of, 60, right? It's really just kind of depends on, how we can put it together and make it the easiest for everyone to get it done. So great question.
Dude, getting creative with it, dude. That's what I love about this whole thing, man, is just having somebody on our team that allows us to bend and twist with the market and you know, kind of get outside the box a little bit, man. So this is awesome.
You have to, right? That's the only way to stay alive and keep growing and getting
100%.
uncomfortable, right? Comfortable in the uncomfortable.
I'm going to the YouTube right now. The manual input it. For some reason, it's not letting me do it.
Here's another one, Mark.
I'd add this StreamYard. Let me go back here.
Can we use self-directed IRA funds for down payment and or liquidity? Yes, most definitely. I personally haven't done that from an investment standpoint yet. My IRA is not big enough, but I know plenty of people that have. So yes, we can definitely use those funds in order to fund. Just as long as I think you need a custodian or something. But I'm not too familiar with how those operate. So, but I'm pretty sure you need someone else to facilitate that for you. And yeah, we can also count it for liquidity as well, even though it's technically not liquid, right?
There you go.
Yes, this was a joke, guys. This was just a joke. we do in Ohio. I think, right? I haven't gone through that.
Yes.
No, I say that and then I'm like, oh yeah, it's one of the 5 states that we don't do. I think it was a joke, guys. Mark handles our entire lending division, so he's going to be the guy to ask. But the intent was just a joke. Yeah. Yep. Oh, Sean, great question. If I own a 40 single family resident properties in Ohio that adds up to 120K total, is that a go?
Is that 120K or is that a 120 million?
Ooh, dude.
That's a good question. That's a good question.
I just want to.
I didn't catch that.
Yeah,
I just want to make sure I'm
the
understanding
best here, ladies and gentlemen.
I just want to make sure I'm understanding. If each unit, if we have a 50K or 40K minimum for each unit, then we need a total, right? So again, I don't want to misquote or do math wrong, but
There you go. He clarified.
And what is it?
Yep.
120. Yeah, that would be too low, right? If we're looking at 40 units.
Yes, Ohio for you.
Yeah, we're looking at $3,000 per unit, man. Lock that up. I'll be your partner. $3,000 for a single family home. That's amazing.
Well, bro, real quick before I let you go, you know, where are you buying? What are you looking for right now? How can people, like, outside of us working together in our lending division of our business and working with you in that faucet, you're also an investor. You're also looking for other properties. What are you looking for? Where are you marketing? Where can people work with you in that faucet?
Yeah, so I've been mostly focused in the last couple of years in Arizona. I love Arizona, but you know, I'm definitely starting to realize that even though I'm seeing a lot of deals come across the desk, I'm not closing the volume that I want to. So, you know, I'll definitely, you know, open up to other markets. I'm West Coast, so, you know, Midwest, anywhere that I can spend, you know, $300 to $400 on a flight, I'm definitely open to partnering and or, you know, getting a little creative to get deals done. Actually, the majority. So we have a decent amount of. Even though I'm the only client facing, we've got underwriters in the back end. We've got engineers on the background. You know, we've got, you know, all the different aspects of the company kind of supporting me. And they're, you know, I want to say 90 to 95% of those people are investors themselves. So there's quite a bit of network that we have that, you know, we can definitely tap into. So, you know, whatever deals that you're looking at, I mean, I'll definitely look.
Awesome. And are you doing single family right now or multifamily or both?
So I have a little bit of experience with mid-size multis. I don't know if I'll get into that ever again. It was just a lot. There was a lot that we didn't anticipate there. So I think if I'm going to do it all over again, I'd go bigger. Just because at that point I can hire, you know, full-time. Mm-hmm. So on my own, I'll take down, you know, 1 to 8 units. or 1 to 12, I guess. But anything over that, unless we're talking about, 100 over 100, then that mid-size range is just not.
Okay. Well, I know we're going to be doing some big things this year, getting some bigger multifamily together. So awesome, bro. Well, where can people reach out to you? Where are you active more on the gram? Are you on Bookface? Where can people connect with you, and what would be kind of the best way to go about that?
Yeah, so I'll put my number in here too. Can I release that on the chat? I don't have a.
It's whatever you feel comfortable with, man.
Can you see
So
that?
I see your screen moving, but it's not shared. I didn't know if you were wanting to share that or not.
I was just trying to find a way to bring it up to make it, big and bold for everyone here.
Oh, I can do it. I wasn't sure if you wanted to show that or not.
Yeah, I just this 520 number right here, 244-0433 is the
Screenshot,
best,
gents.
yeah, best
and
way to
ladies.
call. And then I do have an Instagram. I'm not extremely active on it. I actually did some Mount Rainier climbs, and those were my last posts. I did a winter ascent, but I'm not as active as I probably should be. So I'm gonna actually switch gears here and start posting a little bit more real estate related stuff.
Where can they find you on the gram? What's your handle?
Let me again, I appreciate you guys having me on. Hopefully I was able to shine some light and answer I answered a lot of great questions from the group. I'm impressed.
Oh yeah, no, bro. Thank you, man.
No,
thank you. I think everybody was getting sick of just listening to Chris and I, man. We're like, man, we need to bring Mark on here, dude, and drop some freaking bombs, man. So thank you, bro. Markimus Prime, dude. I love that.
Yeah, that's it. That's actually, I used to coach wrestling. So I wrestled all through college, D1, and then came back to my Dana Hills High School. That's actually the coach of the Dana Hills High School program. He's actually retiring this year.
Oh, for real?
Yeah, he's a Iranian Olympic champion and nationally well known. Really impressive guy. But yeah, he's retiring this year. I went back and coached a handful of years, and the kids would make fun of me and say that, I looked like an Autobot wrestling there, because I was jacked. I was big. I'm skinny now, but yeah, in my younger years.
That's
Nice.
freaking genius, dude. Markimus Prime. I love that. Well, guys, if you guys don't have any more information, we're going to go let Mark go enjoy the rest of his vacay and spending time with his family and enjoying not the 9 feet of snow outside, dude. So I'm jealous. Send some warm weather, maybe some pictures outside or to me so I can live vicariously.
Sounds good. It's actually rainy right now, so not a whole lot of things to be jealous of, but that's okay because we're with family, right?
That's right. Absolutely.
Wendy Clarkson alumni.
Whoop, whoop. It's a small world.
It is a small world. Wild.
There you go.
That's beautiful.
Yeah, man. Definitely appreciate you.
Thanks, guys.
Definitely.
Yep. Thank you, guys. I hope everybody has a wonderful rest of your guys' weekend. Again, if you guys need to connect with Mark, hopefully you guys got that screenshot. If you guys need to get a hold of Mark, let Chris or myself know. We can put you guys in touch. And again, the email to get directly in touch with him is lending@thirdmindrei.com. It's right there. Chris put it in a banner across the bottom. So if you guys are not in a position to write it down or whatever, go ahead and take a screenshot and let us know how we can help you guys. We really appreciate the opportunity. Thanks again for your time today. Hope everybody has a fantastic rest of your weekend.